I'm going to take a look at gold in this video. So the first thing I'm going to point out is we've got I'm about 99.9% confident in saying that we've got a final bear market bottom right here. We've got and that was also a yearly cycle low. This is the yearly cycle low for 2016, and you can see that this yearly cycle low is held above the 2015 yearly cycle low. And for me, that's all the confirmation I need. The bear market is over. I don't need to break some arbitrary trend line or go above some arbitrary number. As long as the market the character has changed and we're starting to make higher lows, and I think we're going to make higher highs this year, then that's all I need to confirm that the bear market is over. The character has changed. We're now making a pattern of higher highs and higher lows. So now if we move over to here, if you'll remember at this top, I kept telling people that gold was due for a drop into an intermediate cycle low, and I said at least two things have to happen. It has to have at least a 3-wave decline, and it has to complete at least one failed daily cycle. Well, most of the gold bugs and perma bulls, told me I was wrong, that gold was going to the moon, but it did exactly what I said it had to do. We've got an A wave down, B wave bounce, and then the second wave down, and that second wave down did drop far enough to break below this daily cycle low. So we have a failed daily cycle here. So we have the components necessary for an intermediate cycle low. Now there was a possibility that we could have another daily cycle down and make a lower low, but at this point that scenario has been negated. Gold has rallied enough to break this top, so this has been confirmed as a final intermediate cycle low. So we are in the advancing phase right now. We're in the advancing phase of a new intermediate cycle. We're in the same position here as we were during this was the first daily cycle during the move out of this intermediate cycle low. So you can forget about gold going back below $1,200. It's too late for that. We've started a new intermediate cycle, so that comes off the table. We're not going back below $1,200. At some point, we're going to get a correction down into a daily cycle low, something similar to this or this. This first leg up, this first daily cycle, will need some kind of correction. But there's a caveat here, and the caveat is that the dollar is not acting correctly. It's not acting at all like it's put in an intermediate cycle bottom. So now let me switch over to the dollar chart. And so here's the dollar, and you can see ever since the top back in the beginning of the year, we've just been locked in this long decline into what I originally thought was a 3-year cycle low, but I'm beginning to think that the 3-year cycle low came a bit early back here in 2016, I guess it was, and this is see if I can widen this out. Here we go. So I'm starting to think that this is possibly an early 3-year cycle low. The reason being is this drop right here moved slightly below the intermediate cycle low before it. So that is a characteristic of a multi-year cycle low. This created a lower yearly cycle low here. So I'm starting to think that this is a new 3-year cycle, and it's rolling over in a left translated pattern, which would mean that the dollar has entered a bear market. And you can see here this intermediate cycle is just insanely long. I don't count this as an intermediate cycle low because it did not break the the intermediate trend line. I'll draw that trend line in here. So here's the intermediate trend line, and one of the qualifications to confirm an intermediate cycle low is that the intermediate trend line needs to get broken, and you can see this did not do it. Didn't do it till over here in April and May. So I don't count this as an intermediate cycle low. So this is one really long intermediate cycle, and it's still, and I did a video on this several weeks back, it still doesn't look like it wants to bottom. This rally here out of this daily cycle low has been very weak. The TSI is already starting to roll over. The rally topped on, I think this is, what is this, day 9 or 10 here. It just did just enough to turn the 10-day moving average back up, which is another qualification for these daily cycle lows. They usually rally just enough, or at least enough to turn the 10-day moving average up, and this has done that, but now it's holding below the 10-day moving average, and the 10-day moving average is starting to turn back down. So I'm going to throw out an idea here that it is possible that this intermediate cycle in the dollar does not bottom until we get past the debt ceiling sometime in mid-October, I believe it is. This could just keep going down, and as I had pointed out in my last video, we could just break right through the 200-week moving average. I'll put that in here and convert this to a weekly chart. So here's the weekly chart. You can see here we just got really stretched below the 10-week moving average. We needed to bounce at least a little bit out of a daily cycle low, and so far that's all we're getting is just more or less some sideways churn to allow the 10-week moving average some time to catch up to price. But I think there is risk if this doesn't bottom until October. There's risk that the dollar just breaks right through this 200-week moving average and breaks this 2016 yearly cycle low, which would confirm a bear market, and then there's really not a whole lot of support on the dollar until we get down, into the 80s, maybe even the low 80s. This could go down the same way that it went up over on this side. Let me widen this out just a touch. So this bear market could go down the same way it went up, same way the bull market went up. So there's risk here. If this daily cycle doesn't get any traction, if it's not destined to bottom until after the debt ceiling, then, and if we are in a bear market, which I think we probably are, then we could just slice right through this 200-week moving average and break this yearly cycle low without really much of a bounce at all. So now let me go back over to the gold chart. So first, a quick look at the weekly. You can see that gold has rallied back above the 10-week moving average. It's holding well above it. The 10-week moving average is turned up. That's a sign of an intermediate bottom. So again, there's really no question at this point. This was an intermediate cycle bottom. We're in the advancing stage of a new intermediate cycle. We're in a bull market, so the intermediate cycle should rally anywhere from 12 to 15 weeks or longer before turning down again into the next intermediate cycle low. So if the dollar doesn't bottom till October, it's a good chance gold isn't going to top until October. Now it will have corrections along the way, but the intermediate cycle is advancing, and there's a good chance that the intermediate cycle will not top until the dollar bottoms again, possibly in October. So, by any normal cycle count, gold should be ready to drop down into a daily cycle low. We're on day 34 right here, so it's due. Gold is due for some kind of correction. But if that dollar rolls over into another failed daily cycle, then this could just turn out to be a sideways consolidation, and the gold cycle could just continue to stretch and stretch. If the dollar starts another failed daily cycle, it could have another 15 could have another 15 trading days before the dollar finds its next daily cycle low, which could imply that gold breaks upwards out of this consolidation and continues to stretch this daily cycle much longer than normal. So I'm going to suggest it's dangerous to be short with the dollar in such a precarious position, even though gold is due for a corrective move. It's dangerous to be short, and I would suggest that you want to at least have some kind of position. Not maybe you don't want to have a full position, but I would say you want to have a partial position, something that you can hold through a correction. If gold does decide to give us, a move down into a daily cycle low, something that's not so large that you're going to panic and sell at the bottom. But at this point, all the signs are pointing to this is a new intermediate cycle. We're in the advancing phase. If we do get a correction here at some point, it's going to bottom well above this low, and then we're going to go higher and make higher highs. So this is not the time where you want to be selling into corrections. You want to be buying corrections right now. So if we do get a correction in gold in the weeks ahead, if you're long gold, you don't want to sell into that correction. You want to be buying that correction because we're gonna go up and we're gonna make higher highs than this. We're gonna go above 1307, and I think we're probably gonna get to at least 1400 in gold this year before we get our next intermediate correction. So my call is that we've already got higher lows. This yearly cycle low held above this one. Before this year is over, I think gold is going to make a higher high and go above the 2016 highs. Maybe not, a big move above it, but I think we could get to 1400 this year before the next corrective move back down. So I'm convinced we're going to make a higher high this year, and we're already making higher lows. So again, the confirmation for me is already there that gold has started a new bull market.